Urgently, we're going to discuss GameStop stocks today. What's happening? Literally, trading of this stock has just started, and there have already been several trading halts, meaning the exchange temporarily halts trading of these stocks. But the stock is growing very strongly. It has now risen by 90%. Let's see what the options market predicts, what volatility it indicates, and to what price this movement can reach, and then we'll see if I was right or not. I'll tell you right away, the border target is $40. Let it be known that GameStop is expected to reach $40 in the near future, and then start to decline. It hasn't happened yet. You can see the time is absolutely left. Trading has started, and the stock has already grown by 100%. Now, most likely there will be trading halts again, and we will reach $40. Why specifically $40? Naturally, this is related to the options market. By the way, I'll show you, look, the border price on the near strikes is $34, but if we look at the further strikes, here we have $40. Trading has halted again due to options not correctly reflecting prices, but as we can see, there are no strikes higher than $40. If we look at October, again $40. Yes, if we look at, for example, January 2025, then $60. But in the nearest strikes, it's $40. That's why we have a very large volume concentrated at $40, and that's why I believe we can reach this value, and then we can start a correction. Again, as we can see, nothing has happened yet. That is, again, I'm doing a live review, and you can see how I will analyze this stock. First, I immediately open volatility. As we can see, volatility is now at 500%. My friends, you never see such things. I've only seen this twice in my life. This is during the GameStop surge in January 2021. Then the volatility here in Hungary were also at 600%. And during the AMC stock surges. Everything, I've never seen anything like this again because this is of course abnormal volatility. And this is also related to the options market. I will now specifically show you and explain how and why this happened. We made videos about this company. We can watch a small clip of what I said there. Moment, we have overcome these two strategies at $14 and $15, which of course from the standpoint of volatility and probability is positive for this stock as I'm telling you. And basically everything I said turned out to be quite truthful. That is, my analysis turned out to be quite accurate. What is happening now with us? First of all, volatility has risen to some incredible values. From this, we can draw several conclusions. The first conclusion is that options are becoming very expensive. Right now, we have primarily gamma compression at work. I'll tell you how market makers operate. We'll delve into this very thoroughly. The higher the price of the option, the less potential for the stock, the less potential for upward stock movement. That is, most likely today the stock is already approaching its $40 values. We'll delve into this. Such high volatility simply cannot be digested by the derivatives market. Also, let's look at the volatility smile. It's very important. As we can see, volatility is increasing towards call options. Mostly we see volatility increasing towards put options. That is, a decrease in volatility is a normal situation, but at the moment, everything is turned upside down. Volatility is increasing towards call options. Naturally, this is associated with such a huge price movement. Everything I'm showing you live. Let's also look at historical and implied volatility. Obviously, implied volatility is currently much higher than its historical values. It reaches 500%. The most important thing is the volume of options trading. What is happening here? As we can see, we have a huge, massive volume from at the level of $30 and $34. And we have already surpassed these levels, therefore we have absolutely no further resistance. That is, the stock can catapult higher and higher until we have some seller emerge. So all resistance in the options market, in the derivatives market, doesn't exist. Only a very serious seller can stop the price. For example, margin call. Someone might have a margin call. Huge sales will follow, which will force the market maker to sell too. And this can be the stock will then drop significantly, but before it drops significantly, a very large seller is needed. So far as we can see, there is no such large seller here, but he will clearly appear. Again, not everyone will be able to hold short positions on this stock. So you need to watch the levels of $30 and $34. Also, let me show you and tell you like this. We've just opened trading, and as we can see, the price has dropped a little bit. In fact, it's a completely normal situation we'll be observing. So now I'll tell you and explain why this happened in the first place and how the options market and market makers work. When you buy call options, specifically investors or traders buy call options on the other side, we have a market maker. He is obligated to sell you call options. Consequently, when he sells call options, he has unlimited risk. That is, if the stock starts to rise sharply and upwards, as it did now, he can lose a lot. Consequently, he must hedge all his sold call options by buying shares. You understand, this is the most important thing. To hedge a sold call option, you need to buy shares, and the market maker buys shares according to the delta. That is the so-called delta neutral hedging with a classic strategy. If the stock starts to rise very sharply, consequently, the market maker is obliged to hedge all his sold call options. And if he has many sold call options, then when the stock rises, the delta also starts to rise. So consequently, for all previous call options, that is, if the stock started to rise, absolutely all sold call options must be hedged. Consequently, the market maker must not only buy shares for new sold call options, but he must hedge for absolutely all previously sold call options. Consequently, in this way, the stock is pushed upwards, and thus at the moment the stock has risen by 100%. This happened exclusively due to a technical moment. I mentioned this technical moment in this video, then I even wrote about a short squeeze, that is, It was already close and it happened. Again, I was looking solely at the options market, at the derivatives market, what signals it sends us. And at the moment, the derivatives market, as usual, turned out to be right. And everything ended well for us. So what will happen next? I will tell you the action algorithm. And then you can see after the market closes whether I was right or not. First, after the appearance of a large seller, after the spiral finishes unwinding, and again, this seller can appear at any time. That is, literally the stock can grow by another 100%, and the stock can literally grow infinitely, because here only a technical moment works. That is, market makers are simply obliged to buy these stocks, plus those who sold them earlier are obliged to buy them back. Therefore, the stock will only stop rising when a very, very large seller comes. That is, the question is this a candle of a large seller? It is not clear yet. I would say that this is not a candle of a large seller. Here we will have to see very, very large volumes. That is, when we have very, very large volumes here, plus we will have a red candle down, only then will we understand that yes, most likely we have had some big selling. Again, at the moment, it will be difficult to understand who exactly sold the stocks. Maybe it's traders selling stocks, maybe someone is taking profit, maybe someone is closing positions for some other reason. So far, the situation is unclear here, but in the future, we will definitely find out who sold what. But until the big seller arrives, the stock may continue to rise, and what will happen after they arrive? Consequently, the price may sharply drop, for example, by 20 or 25%. Therefore, all the hedge that the market makers were obliged to buy, they will now have to sell. Consequently, the company may start to fall even harder. Again, the spiral that was unwinding upwards will unwind downwards, meaning that just as we were growing rapidly, we will also fall rapidly. We can see all of this in previous short squeezes, like what happened in early 2021. The same thing, as we see, we very rarely closed at our peaks, meaning that big sales always followed. Therefore, the same thing could happen now, and as we see, the stock has fallen very significantly. Yes, perhaps this is the same fall I was talking about, meaning that the seller has arrived and they start selling. Consequently, at the moment, the market makers also start selling all their purchased hedge, and this can develop very quickly. Let's look at the volatility. It should start to fall too, although it's not falling much yet, but again, we'll keep watching. There's no point in considering market forecasts right now because everything is incredibly chaotic. Everything is happening very, very quickly. Also, I wanted to mention the company AMC. Here the situation is much, much sadder. By the way, I remind you that I have a portfolio that I manage, and consequently with regards to AMC stocks, I've made quite a few trades. Specifically, I sold call options, about 30 of them. Again, this is according to my position management. I have bought shares. Then, at the end of the week, I'll tally up the results, and I guarantee you, there will be a very significant profit. My strategy will only further ascend. I'll summarize everything, record it in my spreadsheet, so don't miss out. AMC, of course, feels much worse, but since I sold call options, naturally, it has already resulted in significant profit for me. We'll keep an eye on the GameStop, and if needed, I'll add some comments on my channel. Subscribe so you don't miss it. As we see, there are very large volumes being traded. Also, while the situation has stabilized somewhat, let's look at the news. Everyone is talking about the return of a very popular blogger, the Roaring Kitty. We can see that in reality, no videos have been released yet. Again, it's a tricky situation because it was thanks to him that we had the legendary short squeeze in early 2021. I think all this news is also exaggerated because there was a huge wall of call options here, which, for those who understand the market, could slightly manipulate the situation, boost the stocks, and set off a domino-like growth. And these news items could have served as triggers. But again, for now, that's the situation. So subscribe to the channel to not miss out on further reviews. I hope you enjoyed my real-time updates. Good luck to everyone.